Welcome back, Alpha Hunters. Hope you had a great week. The markets are closed for the week of February the 24th of 2023. So let's figure out what was going on this week because it was a pretty busy one. All right, so let's check out this 15-minute chart for this week. And Tuesday, remember we had a short week. We did not trade on Monday. So Tuesday, we actually opened down from last Friday. A pretty good little gap down here. We had a gap down of roughly 1%, a little bit over 1% on the SPY. And we traded a little bit higher, and then we just kind of slowly and steadily kind of just rolled over. And this was a pretty important gap because we did gap below last week's low, which I think was last Friday. Yeah, it was last Friday. So basically we just gapped below it and then retested right into Friday's low and then just rolled over and just kind of traded down the rest of the day. And then we got to Wednesday and it kind of seemed like the market was trying to find some bounce action off of this trend line that we've kind of been in from the bottom of October and through the bottom then in late December. So it was trying to kind of bounce off of this and it just never could quite get it. This little volatile time period here in the afternoon on Wednesday was when we got the FOMC minutes. And it kind of spooked the market a little bit. A lot more talk about a possibility of 50 basis point increase in the last Fed meeting. But it seemed like they were all in consensus that we're probably going to go higher in rates. So we expect that going forward. So that's why we got a little rollover here in the middle part of the day. And then kind of flat to end out the trading session, a little pop here going into the close. And a lot of that pop probably had a lot to do with a lot of good expectations coming from NVIDIA's earnings, right? NVIDIA then had earnings Wednesday after the bell and they smashed it. They mentioned AI like, I don't know, 90 times in their earnings announcement. NVIDIA just absolutely crushed it. They were up like 12 or 14%, I think, on Thursday. They were absolutely obliterating it. But you saw the market kind of just trade sideways here for about 30, 45 minutes, an hour, and then it just got past that first hour of the trading day and just rolled lower for about an hour and a half. And it was a pretty strong move. Not a whole lot of volume. It was a little bit of a volume uptick, but it was just very trending in one direction. And then it finally kind of bottomed out, got below then the Wednesday low, and then it stopped moving, right? It's just stopped moving. It just kind of consolidated there for about 30 minutes and then started to just slowly rebound back higher. Now, when I was on the live stream that day on Thursday, I was kind of mentioning as we were going higher, we should not take out the low of Thursday. Now, I was kind of in anticipation of Friday we would continue to trade higher, right? Because we had a huge then lower wick for Thursday, and it was looking very bearish as we were down at these lows at the middle part of the day. And then as we rallied, it was looking extremely bullish. As we came, we snagged the lows and then we bounced. So it was kind of one of those situations where we shouldn't take out that Thursday low. So I was kind of mentioning that, but that was kind of the expectations of we were going to continue higher Friday, probably into early next week. But then Friday comes out. Now, Friday, we had a huge gap down. This was, I believe, about a 1.25% gap down. Let's see how far this was. We gapped down roughly, about 1.3% on the SPY. And we got just below that Thursday low. Retested into it, rolled lower for about an hour. It wasn't aggressively lower, nothing like that Thursday move, right? But we just kind of chopped around for a good part of the day. Tried to move back higher. We closed just above the low of Thursday, which I was kind of thinking as we got this one little pop here in the 15-minute going into the last hour of the day, I was like, if we could push up to like 398, 399 in that final hour of trading, I would be a little bit more looking bullish going into next week. And I think I am kind of leaning that way, but we'll talk about that here in a little bit. But yeah, this was a huge gap down. It really was. The market was already on a pretty good support, and then we gapped in below the kind of support level you were trying to bounce off of. Now, we didn't really break down. If we would have just traded lower, it would have been like game on, but we didn't just break down on Friday. So that's kind of a key point to note there on Friday's price action. All right, so here's a look at sector performance throughout the week. And what you notice is energies, materials, and staples did the three best. Then financials were, fourth best then for the week. roughly in line with the market was the XLI, XLV, and XLK. Some of that tech, also a little bit of that, XLU utilities kind of all coming in the middle of the pack there. And then the lower three were XLC, the communications area, XLRE, real estate, and the XLY, discretionary. So a little bit of hodgepodge, a little mixture of everything kind of just scattered around. Not really like so much a clear risk on, risk off type situation. A little bit more of a risk off week, but not a very clear risk off week. So taking a look here at the week over week options changes. We had two new options come in for expirations, this April 6th expiration and then this August 18th expiration. Both of those popped up this week. But one of the things that you'll notice is, man, there was a lot, and I mean a lot, of put buying out here for the April 21st expiration. Massive amounts of put buying. Now, nothing as far as the total amount, obviously the total amount still sitting right here at this March 17th. But I mean, if they keep buying options at this kind of pace, obviously the April 21st expiration will get up there eventually with that March 17th. But once we get past March 17th, obviously there's not a lot of contracts then open interest in the system. And then once you get past the halfway point, there's really not much in the back half of the year. But man, there was a lot of put buying. You can see just about every expiration, just put buying is more than the call buying, except for here in the March 10th, a little bit more call buying, and then a little bit more call buying here in the 21st of July. So, but yeah, still a lot of people buying puts out there. All right, take a look here at the DXY. DXY had a very strong week this week. Tuesday, Wednesday, Thursday, just kind of very moderately traded higher. Friday exploded higher. So pretty big move on Friday. Starting to get a little bit extended, even if it pops a little bit on, maybe Monday or Tuesday this next week, it's going to come right into the 100. It would also take out this high that from this wick that we put in on January 6th. It's maybe getting a little extended. I can see this a little bit more of a rest action for the next couple of weeks. And if that does happen, you got to ask yourself what's probably going to happen with the stock market, right? So, if the dollar does kind of come back, have a little consolidation, pullback time, what are you expecting out of the stock market? And that's kind of the one thing I would probably say. Probably not the perfect time to go bearish, but I'd be possibly looking for opportunities later on if the dollar kind of gets in and settles in for a little bit, probably into middle March, as we approach CPI and here in about 2 weeks. I'd be looking probably for that kind of a play, not for just the dollar to keep exploding higher. Obviously, the dollar's been weighing a lot on the stock market, so any kind of rest would be a good time for the stock market to possibly go bullish. Looking here at the 10-year rates, ended kind of at the weekly highs, had a nice little day on Tuesday, a little pullback then on Wednesday, Thursday, Friday, then just kind of popped up to the weekly highs. It looks very, very much like a bullish pattern. Probably just going to continue higher. Nice little consolidation. Might consolidate a little bit more, maybe come back down a little bit more, consolidate again, possibly with the DXY and the dollar, and then push higher later as we approach CPI and FOMC later on in March. But taking a look here at the 2-year yield, let me just open this up a little bit. And you can see that we are approaching this trending high that we've been in really over the past 15 months or so. And that November 4th high, I mean, we're getting right up to it. I'm not going to say that we're going to push higher and take that out early this next week, but I wouldn't be surprised if we did. And if we did, I'd be looking probably, for it to come back down, gain some steam and then push higher later on. Not really looking for a lot of these things that look like they've been in a pretty good trend for most of the month of February to kind of continue the trends that they've been on, especially with how much they moved on Friday. I wouldn't expect them to continue to get as elevated as and extended as they have been on Friday. Looking here at the 10 and 2-year inversion yield, yep, broke it down again. It's going to get back down. It's probably just going to continue to break these lows. This is another reason why I think we're probably going to go bullish on the market, because the 10 and 2 is not moving back to the neutral area. It's still getting more and more inverted. And as long as this thing continues to move more and more to the inversion territory or deeper into the inversion territory, we're probably not going to see the reckoning in the stock market that I know it's coming. We all know it's coming, but this is not telling us it's here. It's not at the door. It's probably walking up the path. Take a look here at GLD. Nice little gap down here on the GLD. So gold looking a little bearish, still pulling back. I like it. I like it a lot. Obviously, the dollar has a lot to do with this. So as long as the dollar continues to be strong, we're going to see GLD, gold, and silver, also SLV, looking kind of weak right now, but let them come down, let them kind of bottom out, let them base out, and then kind of catch them on the way back up. There's no reason to catch them on the way down. Now, talking about the bonds, the HYG, LQD even, we'll take a look at that here in just a second. But the HYG looking pretty strong this week. This is kind of giving me another reason why I think we will probably pop higher going into next week. The HYG not really breaking down, right? Not breaking down, Wednesday, Thursday, and Friday. So definitely could see, HYG bonds, probably picking up, and even the LQD not really breaking down, that Tuesday low. So we can see the bonds, take a rally here and kind of help the stock market out. It is something I mentioned before. I want to see what happens when the bonds and stock market rallies. Do the bonds kind of get up and retest into some of these little lower consolidation areas? And if that is happening, if the stock market is making a new trending high and taking out the February high, I want to see possibly what that looks like. And if that is happening, could be a really good time to possibly be getting bearish back on the market. I'm just not going to call that right now. That's why I'm still just kind of market neutral, not really looking to be directional too much, but it's just really one of those things. We're getting a lot of data, it's all different directions. So, flip a coin. One day, market's going to be bullish on data. The next day, the market's going to be bearish on data. It just is what it is right now. Just continue to manage your risk. So the big stock of the week was NVDA. I mentioned it earlier that they had earnings, and they absolutely crushed earnings. They did a really good job, but they did mention a lot of growth around AI. They talked about AI a lot. And so this thing's looking pretty good. Obviously, it came back down a little bit on Friday, a little bit of a gap down there. But people are going to continue to buy this up. And semiconductors might be the area that really kind of holds up the market, as NVIDIA is just kind of showing that semiconductors are so much in demand for so many different pieces of technology out there. Now, the latest craze is AI. That's probably going to be the craze for 2023. Last year it was like the metaverse and stuff like that, or really that was like the previous 2 years, I guess, and that's why Facebook changed their name to Meta last year. But, it's just one of those things. We're going to continue to see AI kind of push stocks around, and NVIDIA seems to be a clear early winner right now. That's probably just going to continue to be NVIDIA for now. All right, so take a look here at the Qs. So I've kind of mentioned before, I was looking for this pullback here on the Qs and the SPY. We'll take a look at the SPY here in just a second. But I was looking for this pullback. I thought Tuesday, Wednesday of this week, we'd have that pullback. We'd start to curl up, Thursday, Friday, and then, continue that into this next week. So it was working. It was working up until Friday morning. And a big part of Friday morning was the PCE data that came out. It came out a little hot. I'll take a look at that here when I'll look at the SPY. But the Qs pulled back a little bit, got right to that 50 exponential on a daily. Also got into these highs that I put in back in November and December. I like it. I do like it. Even though we got a little bit lower than what I was expecting, I like this area a lot. And let's take a look here on the fib, kind of where we've gotten to. And roughly, we've pulled back a little bit more than 38% of the retracement. 50% would be a little bit lower. Maybe like another, let's see how low this would. It'd be like another 1.7% lower. So basically like the move that we had today, like this gap down that we had on Friday, that's about the same move that you're talking about. I don't know if we do that. I think you're going to probably get the buyers to come in and try to support the market, get one last push higher. If they can't push it back up and take out the Feb highs, you're at least going to get a retest here, and maybe we roll over before we get back up and take out that Feb high. But yeah, as far as the Qs, I do like this spot. I don't in any intents and purposes think that we're just going to sell off and come all the way back down to these December lows. I think we'll see at least another push here on the market, especially since semiconductors, they're a big part of the Qs. So I mean, we will definitely see probably Qs be a little bit more bullish here as we go into next week, especially with how much volume that we had come in today. Probably makes sense that we probably bottom here in the near term. But if we roll higher this next week, and then the second half of the week we start to come back down, yeah, that's not going to set up all that well. Okay, and I'll show you why here on the SPY. All right, so taking a look here at the SPY, I did go ahead and clean up some of my chart. I know there was just so much mess out there. I did kind of convert some of that CPI and FOMC dates and times, just these vertical lines, mostly because it was driving me nuts seeing all the text all over the place. But this red box up here, if we get back up into the zone, this would not be the buy zone. Okay, that's what the red box means. I wouldn't be bullish. I don't know if you would just go straight into being bearish up at this part, but I would just, if you're being long, if you're being bullish here, especially on this pullback, we get back up into this area, which if you notice, the lower part of it is just below this wick. So if we get back above that Feb high, I would start taking it off. That would be a good time to just start taking it off. And, you know, just wait and see what the market does, especially as we get into the CPI and the FOMC kind of time frame here in March, and maybe even in April. I would just see what the market kind of gives you at that point in time. But I would expect a little bit of a push here. I know it's been a little bit more of a retest here recently. The market has been trying to bounce here over the past few point levels from about 398 to, you know, obviously the low of today is like 394 or so. We've seen some buying come in here. So yeah, you know, I still think we'll probably see that. Now, if you want to know kind of where we are on this retracement here from that low that we put in at the end of December to this recent high that we put in at the beginning of February, well, we got just under the 50% retracement of that whole move. So it makes sense that we were trying to bounce there, and we did actually close just above that level because we did close just above Thursday's low. So it makes sense that there are buyers trying to come in there. It's pretty key technical level for at least this move. Also, the top out here, if you see this line over here, and I actually extend this out if you like, the extend lines to the right. There we go. So this line here that you see right here, 50%. So from the all-time high to the October low, we retraced 50%. From that high to low to that retrace was 50%. Now, I do like the idea of us coming a little bit higher because it would freak everybody out. It just freaks everybody out. A lot of people have said, okay, now we've hit a wave C. We should go bearish. Sure. I mean, it makes sense that we should go bearish. I just think too many people have looked at that and called that and said, okay, we should be bearish now. So I don't think the market's going to make it that easy because it hasn't made it that easy over the past couple of months. Over the past couple of months, it's been a little bit more difficult to kind of spot some of these support and resistance areas. So I would expect the market to probably push higher. Now, if we look on a weekly, this is a pretty bearish look here. So we obviously gapped down below last week's low, right? We already knew that. We already talked about that. So if we do try to pop bullish early this next week, and then we roll over and we form, a nice little, like upper wick, but on a weekly time frame, something like that. I mean, it's not gonna look the best, right? So if we bounce early this next week, you need to be pretty tight with some of your stop losses and that kind of stuff, because we need to get back above. And if we don't, and we take out this week's low, whether it's later in the week, next week, or the week after, you can probably just expect to see more lows as the bulls were able to flip the market, getting back above that December high in January, and then kind of really messed around with people trying to flip positions and stuff like that And, it's basically just going to be a false breakout up here. And then we're just going to move back in the bearish direction. So if the bulls don't reclaim basically the bullish narrative here over the next week, and we get back above like 404, 405, and that kind of stuff by the end of next Friday, yeah, we might just chop sideways, or we might be rolling down. Like, there was obviously clear buying at the lows of this week. So don't expect us just to go into next week and just be bearish. We'll have to see what it looks like. And a lot of the things that have been pushing the market in the bearish direction, like the dollar and rates, they're getting a little bit extended. I can see them resting out here for the next couple of weeks before we get to the CPI. So we'll kind of see how it plays out. But that's really kind of what I'm thinking for now. I'm not really changing the game plan. I am expecting us to have another push higher. Whether we get up to the 420s or not, we'll see how it kind of plays out. Because here over the next 2 weeks, that would be one heck of a move for the market to make that. And that is kind of another thing, is if we get up into like 414, 415, then on March 13th, and then we gap up on CPI, I would fully expect if we get over 420, the market to just sell it off and just get crushed from then on. But I wouldn't play it that way. I just could see that happening. That's all I'm saying. Alpha hunters, have a great weekend. That's kind of my game plan. Still just sticking to it. Market neutral. Expect a lot of choppiness going forward, and not really getting a very clear picture on what the market's trying to do, because that's just what the market's doing. Alrighty. Take care, alpha hunters.